Very good afternoon to all present here. I, CS Surbhi Jain, on behalf of the Institute of Company Secretaries of India, extend a very warm welcome in today's webinar under EEE 5.0 Master Knowledge Series. I'm delighted to have all of you here as we explore one of the most relevant and dynamic business structures in today's professional landscape, that is the Limited Liability Partnership or LLP. A limited liability partnership in India represents a modern hybrid business structure that blends the organizational flexibility of a traditional partnership with the legal safeguard of a corporate entity governed by LLP Act 2008. This structure offers a high degree of contractual freedom through an LLP agreement, allowing partners to decide internal governance mechanisms without rigid corporate formalities. As company secretaries, we play a crucial role in guidance business entrepreneurs and professional firms through the legal, procedural, and compliance framework that govern their operations. The LLP structure introduced under the Act has been a preferred choice for many due to its blend of operational flexibility, limited liability protection, and relatively simpler compliance requirement. Members, this webinar aims to provide a comprehensive understanding of LLP formation, management, regulatory obligations under the LLP Act while highlighting the unique advantages it offers, such as limited liability protection, operational flexibility, as we have talked about. And with this small introduction of the topic, now I would like to welcome the eminent speaker for today's session, CS Manoj Hurkat, for further deliberation on this specific and special topic, the limited liability partnership. And now I would like to read his brief profile. He is a fellow member of the Institute of Company Secretaries of India and has been a practicing company secretary since 1997. With more than 27 years of experience, he has been advising to various corporates and other stakeholders on various aspects and facets of corporate law, governance, and compliance of rules and regulations. In the year 2015 and 2016, he was part of research committee set up by ICSI, which published primer on company law. During the year 2016 to 2024, he has also contributed as the member of Auditing Standard Board of the Auditing Standard set up by ICSI for formulation of auditing standards applicable to the members of the ICSI. With this brief profile, we welcome him in the 35th session of this EEE 5.0 Master Knowledge Series, and I'm confident that today's deliberations will enrich our understanding and equip us with the updated knowledge on the topic. All of you are requested to post your queries, and we will take up the same either during the session or at the end of the session. And thank you once again for joining. Let's begin our journey into understanding LLPs in depth and unlocking the opportunities they offer for both professionals and businesses. So we welcome you, sir. Over to you.
It's my pleasure. Yeah. I will share the screen. First of all, very good afternoon to all professional friends. Thank you very much, Surbhi and ICSI support team for facilitating me to join this webinar. At the outset, I am also thankful and must convey my words of appreciation and gratitude for ICSI leadership team for coming out with such kind of webinar series, which are really very, very empowering, because it provides an opportunity to have the knowledge sharing as well as provides a medium of interaction. As we day in, day out practice on many areas, there are many practical questions and insights which are there with us. And the forum like this provides that opportunity of interaction. The topic for today is limited liability partnership. Surbhi has already introduced a bit of it, and we would try to take note of other various aspects which are connected with the same. I know with my learned professional friends who have joined for this webinar, they would also be favoring with their insightful questions and their comments and views on the subjects. I'm sure with that, we would be able to explore not only the regulatory provisions, but would also like to dig deeper into the basic concepts and also try to have that practical insight into this limited liability partnership, which has been enabled in our country from 1st April 2009. Before I start, a word of disclaimer that whatever is discussed, deliberated in this session, during the course of this session, this should not be construed as professional advice. And this is more for knowledge sharing and for the interactive purpose only. With that, I would like to set the ball rolling that this is the first aspect which I would like to convey is that our country, India, is on a growth trajectory. And so India is bound to grow, fourth largest economy in terms of GDP, has already been achieved, marching towards third number. And of course, there are various global events and various geopolitical aspects are at play, so many uncertainties and all that is happening. But one thing is very, very sure, that India is going to grow. And as such, it is already growing and one of the fastest growing economy. And when a country grows, its corporate sector is bound to grow. I would say both are inevitable and both are closely interlinked. And we as a company secretary are very, very fortunate that we are dealing with a corporate form of entities, specialized professional for the corporate entities. Of course, there are many, many options which are available for those corporate entities. All my professional friends already know about that. I would only like to touch upon few things which we must take note at this stage, that there are already various corporate entities, which are already available for choice by the entrepreneurs whenever they are starting any activity. And to address the new requirement of the business, trade, commerce, and industry, new options are keep on coming. Like presently, there is a buzz of special purpose acquisition company, that is as far as company is concerned. Within LLP structure, there is a buzz that maybe we may come out with a concept of producer LLP, just on the same footing like producer company. All these are the matters at this juncture under debate. So point is that there are bound to be various kind of corporate entities which are going to be at play. I know that we as a company secretary, with our knowledge, with our curriculum, and with our experience and exposure of dealing with corporate entities, we can really be a helping hand in not only selection of the entities to be chosen, but also for its formation, and we can also assist in its governance. That requires us to know various aspects connected with those entities. Just to have some idea with respect to this aspect that although many of the times there is a categorization that yes, if business or activity is small, go with partnership and then upgrade to LLP, and then it's a corporate, a company format, private limited, public limited, and all those kind of stuffs. But the way in which options are unfolding, the way in which regulatory framework is getting created, there is within company format, there is that concept of one-person company. And suddenly it changed the entire dynamics. So we, company secretary, are always mindful and aware of those kind of things. In this session, we would explore various aspects connected to the LLP format. So why there is a need to know for the LLP format is because of couple of things I would like to place for the consideration. Is one of the aspect is that at this juncture there are 4.5 lakh LLPs which are already incorporated as compared to 20 lakh active companies which are in play. But if you notice that the formation of LLP is slowly, gradually gaining, in the sense that if I track the data of last 1 year, we find that if, let us say, last few months, if there are approximately 15,000 odd companies getting incorporated every month, around 7,000, 7,500 LLPs are also getting formed. So this concept is gaining traction, and I would not be surprised to see that in the time to come, number of LLP formation on month basis may probably surpass the number of company formation in the time to come. So that is there, but at the same time, although on one hand it is said that there are lesser regulations, but on other hand, few regulatory aspects are getting suggested for LLP format also, like there is a buzz with respect to accounting and auditing practices of LLPs. Lot more is going to come in the time to come. It has already, there are a few more provisions which has already been introduced for declaration of beneficial interest in terms of significant beneficial owners declarations. So all that requires that although it may be projected as a smaller kind of entity, but it is also having various kind of regulatory requirements for which the able assistance of company secretary would be required for these kind of entities. And from that perspective also, it's necessary for us to go through this the LLP as a concept. So I would directly go to this aspect that and it is already said that LLP is basically a hybrid entity which has some of the features of the company and partnership. And there is so many things laid down with respect to that, comparison of firm, LLP and company, all that is available, wealth of and number of inputs are already available. I would only focus on the filtered wisdom arising out of comparison of these type of entities. So if I look at it, and this I keep in mind, and we all company secretaries should keep in mind, because this helps us to evaluate the need of the businessman and help them to suggest the right kind of entity. And for that, it is necessary that this basic understanding, basic clarity with respect to these different form of entity is available to us, and it is within us, so that it helps in proper guidance. So as far as LLP is concerned, the basic feature of company which it carries is that it is also a separate legal entity. It is also a bodies corporate having limited liability and registered with ROC and regulated by ROC. But at the same time, why it is not like a company? It's because of this aspect that basically in company format, there are the structure of shareholders and directors, which is not there in LLP. There is a concept of partnership, who are the contributors of the capital, as well as they are the persons who are managing the business entity. At the same time, there is no concept called issuance of securities. And therefore, many of the times when businessmen want to set up a business, and if there is a concept, if they have to go for listing and those kind of things, or if let us say sweat equity or ESOP is required to be issued, then LLP may not be workable in those kind of situations. So there, that basic comparison is required to be like that. Why it's like partnership is because of the fact that it's same as that two persons coming together for business purpose with sharing of profit. But why it is not like partnership is that this is very basic difference, that basic concept of mutual agency is completely missing in the LLP concept. That is, every partner is a partner of the LLP, and by the act by the acts of the partner, LLP is bound, but by the act of the partner, other partners may not be bound by that. So there is that shield of concept of that mutual agency, which is otherwise present in partnership form, is not there in this. So the main factor which govern the choice between firm and LLP is like this, that basically if one want limited liability, separate legal entity, and bodies corporate benefit, then naturally one has to opt for more compliance than that of partnership form. And the main choice or the main trade-off which is there between the concept of this LLP and company is this fact that if I want all these benefits of bodies corporate, limited liability, separate legal entity, but if I am happy by not having that concept of shareholder and director, and there are no issuance of securities ever required by during the course of my activity and business, if it does not foresee that, then yes, LLP would be the better choice in that case. From taxation viewpoint, the main choice or the main trade-off lies in the fact that for LLP, tax rate is more than that of the company. So let us say if it is approximately 25% tax in case of company, for LLP it is approximately 30% of the tax. So tax is little more on LLP, but there is one very important aspect which comes into play, is that when profit is distributed by the company to its shareholders, at that stage another taxation gets kicked in, which may be in the form of tax on that dividend or tax on buyback or whatever, and that is taxable in the hands of the shareholders. While in LLP, once that 30% tax is paid, that entire amount remains tax-free in the hand of the partners. So of course, all those aspects are to be carefully evaluated, and all these aspects are required to be taken note of, and that help us to decide as to LLP is better suited in that given case or not. Although LLP is said to be a bodies corporate, but we come across a variety of these kind of aspects where we find that LLP is considered as partnership or firm. For example, in Income Tax Act, LLP is considered as partnership firm. So there is no difference as far as income tax is concerned. LLP is having same treatment as far as tax aspects are concerned as that of the partnership and the firm. Since although it is more than 1.5 decades, but still we find at many places there is some confusion or some difficulty or some challenges in giving the treatment to the LLP, whether it should be given treatment like that of the bodies corporate and company, or should it be given treatment like partnership and firm. And that confusion, sometimes that challenge remains, and still we come across those kind of situations where things get cleared, and still on certain aspect things are not clear. We will try to take note of few of them and try to know as to how to tackle those kind of situations and those kind of things. But fortunately for these three aspects which is there on in this slide, there is that clarity, and there that LLP is treated as partnership or firm, like for significant beneficial owner disclosure, both under the Companies Act and under LLP. So if LLP is holding any share, or if LLP is a partner of another LLP, then for determination of significant beneficial owner requirement, LLP is considered as partnership entity to find out that indirect holding by that LLP into it, and to determine whether there is any reportable SBO or not. So that remains always challenging, and that requires us to always remain connected with the concept, so that we are able to tackle those kind of situations and those kind of issues. In this session, this is what the structure I propose to follow, that we will deal with LLP basic concepts. Some of them we have already taken note of. I will particularly deal little bit about concept of partner and designated partner. I know there are sometimes not that much clarity as far as that concept of designated partner is concerned, and LLP agreement, which is at the core of this LLP concept. We will try to know about it, incorporation of LLP, as well as these basic aspects. So para ABC we put under one category, and after that I would invite questions with respect to that particular portion. Thereafter we will take up each of these. This is already there before you. I am not just repeating for the sake of time. For saving time, I would and you accordingly you can raise your questions based on that particular stage of the presentation. So I hope you have taken note of it. So the basic aspect which is required to be kept in mind is there is that minimum 2 partners, including minimum 2 designated partners, are required. This aspect we will take note of when we deal with that concept of partner and designated partner. Is it possible to form LLP with one person? Answer is no. But fortunately, option is there to go for one-person company concept, which is there in the Companies Act. One aspect which is also required to be taken note of is that, is there any limit as far as capital contribution or as far as turnover of the LLP is concerned? Please note, certain limits are given for contribution, capital contribution, or for turnover, but those are given for determination whether this LLP is a small or not, and whether audit is applicable or not. But otherwise, there is no such kind of limit. So LLP under the LLP Act can have any amount of capital contribution and can have any amount of turnover. There is no such kind of restriction on that. So that aspect is required. In fact, in LLP, there is no limit on the maximum number of members also. No limit. In fact, as you will find that in filing requirement, there is a concept that up to 500 partners detail can be given in the form itself. And if it is more than 500, then Excel attachment are to be attached. Additional Excel attachment is to be attached in the form, including in Philip at the time of incorporation or in LLP 3 for filing that LLP agreement. So whenever there is any increase or decrease, then that LLP 3 will come into play. Question arises, is there any minimum capital requirement? And one aspect required to be very clearly taken note of is this, that there cannot be a partner with zero capital contribution. So every partner under LLP must have some capital contribution which must be more than zero. But whether partner with zero profit share is possible under LLP Act? Answer is yes. And whether capital contribution ratio and profit sharing ratio can be different? Yes, it can be different, right? But can profit sharing ratio and loss sharing ratio can be different? Answer is no. In normal partnership, this may be possible to be done under for that, but then under LLP concept, this is not made permissible. So profit sharing ratio and loss sharing ratio would be same. Partner with zero profit is possible, and it will get accepted in LLP 3 also, right? But capital contribution, you cannot put zero in any partner. This is how the entire structuring has been done. So sharing of profit can be zero, but the total profit share of all the partners taken together must be 100%, right? It cannot be more than that. It cannot be less than that. There can be few partners with zero profit share, but profit share of all the partners taken together, you should be able to achieve that number of 100%. So the point is that all partners cannot have zero like that. Okay. So this is what is with respect to the noteworthy feature, and around that the entire structuring of LLP is required to be taken care of. Now let us take note as to what is there in the LLP regulatory framework. So as we all know, regulatory framework is given in LLP Act 2008, which came into effect from 31st March 2009. It is an act having 81 sections and various chapters, which is divided in various chapters and various schedules. It has been amended 2 times, only 2 times. And the major amendment is by virtue of the LLP Amendment Act 2021, which came into effect from 1st April 2022. And earlier, there was only one small deletion by virtue of Insolvency Bankruptcy Code 2016, whereby Section 64C of LLP Act was deleted, by virtue of which unable to pay debt was deleted as a ground of compulsory winding up of LLP. We all know that now LLP is also part of IBC as a corporate person and having the same treatment as that of the company as far as Insolvency Bankruptcy Code is concerned. So if there is default in payment of dues, then financial creditor or operational creditor can initiate CIRP process by making an application before NCLT. It's by virtue of that change and by virtue of IBC. We will explore this in the topic of winding up and dissolution and strike off of LLP. So that was one small amendment, and major amendment took place by virtue of that Amendment Act 2021. As far as rules are concerned, there are 3 rules. One is LLP Rules 2009, which came into effect from 1st April 2009. It has been amended 19 times. Major amendments were in terms of changing the format of the forms and all that. Whatever major amendment which has taken place in the year 2022, 23, and only one change of that strike off has gone to CPACE for that changes there in 2024. It's a very small rule comprising of only 41 rules. So normally we find typically rules are always more than the number of sections, but in case of LLP, it is other way around. Here, number of rules are less than the number of sections in the parent act kind of situation. Okay, so for winding up and dissolution, there is a separate rule which is that which is already there on the screen. Earlier there was rule of 2010 which got superseded by rule of 2012. Although it's a very bulky rule, but a major part of it is now not applicable because now, as I said, that winding up as a concept has been reduced under LLP because inability to pay debt is in IBC, and voluntary winding up of LLP is also under IBC. So all the rules which are there pertaining to that are of no use. So although rules are very, very bulky, but then it is applicable now only for compulsory winding up of LLP for reason other than inability to pay debt. So it has been here. One point I would like to mention over here is that the LLP Act, rule, notification and circulars are available on the web MCA site. In that on the Companies Act is available there. This LLP ebook is also available, and it is really very, very updated, and you can track all kind of changes. Each and every notification and circular is available, and the facility of search is also possible in that. So it's we must make good use of this to track to any of the regulatory requirement and provision. So whenever there is any interpretation issue or we want to know what is what and when it was there, all that can be tracked very conveniently and easily and effectively by making use of this ebook on the MCA site. Now would like to touch upon this concept of partner and designated partner. This creates little confusion sometimes in the minds of the person who get to know about this for the first time. And therefore, at the concept level, this clarity we must have as to what is that requirement. So in terms of requirement, it is said that every LLP must have at least 2 partners. At the same time, it also must have at least 2 designated partners. It does not mean there has to be 4%. The point is that basically designated partner is essentially a partner only. And that partner who is designated. So what is basic difference between a normal partner and designated partner? That gets captured and cleared by virtue of section 8, which is always to be kept in mind. So designated partner are those partners who are liable for the acts, deeds, matters, and things which are required to be done for the compliance of the LLP Act and for filing of forms, documents, and returns. So basically, under LLP Act, it is the designated partners who are given this liability of compliance and liability of filing of forms. So for that, normal partner are not liable. It is the designated partner who has to shoulder this responsibility, shoulder this compliance requirement. And that is there. Apart from that, whether there is any special right or special treatment given to designated partner under the LLP Act or under rule? Answer is no. But can they be given special privilege or right or special treatment by the LLP? Possible under the LLP agreement. So if there is no special treatment to designated partner under LLP agreement, the partner and designated partner are at par. It's not like that they will get more profit share or they have to make more capital contribution, because all that is as per their agreement. So this aspect is required to be taken note of, is that and it's not like that designated partner are like directors and partners are like shareholders. No, concept of shareholding and directorship is completely missing. So to say it more clearly, can a partner act on behalf of LLP? Answer is yes. It's not like that it is only designated partner who will act on behalf of LLP. As far as or participation in the management or governance of the LLP is concerned, both may be given same treatment unless LLP and partners decide to design it differently by virtue of LLP agreement. So yes, LLP agreement you can design that only a designated partner would participate in the governance and normal partner would not participate in the governance. Then matter would be otherwise. But if there is no special or specific treatment given to them, then partners and designated partners are same. So why designated partner concept has been mooted is only from that angle that as far as any form which is required to be filed on MCA or any compliance requirement under LLP Act or rule is to be done, then it is the designated partner who will be liable for that. So it is from the angle of that liability that this concept of designated partner has been created under the LLP Act. And there is no other concept which is to be brought into play, right? And at the same time, we should be mindful of the LLP agreement, where partners may give, because a lot of flexibility is available under the LLP concept through LLP agreement, similar to like that of partnership, although LLP is given that bodies corporate and all those benefits. So it has been like that. So and one more aspect which is required to be taken note of, and that also creates some confusion, is with respect to the fact that the nominee of the bodies corporate. The LLP Act in the previous slide, the very first point which was required to be taken note of is that in LLP, only individual and bodies corporate can be the partner or designated partner. So any entity which is not individual, which is not bodies corporate, cannot become partner or designated partner. So only individual or bodies corporate. I know question will come, can HUF become the partner of LLP? We will park this question at this juncture, and probably I will link it with SBO concept. I will link it with other aspect. But at this juncture, let us firstly freeze this aspect of the understanding of the basic point so that we become ripe for those other questions and other aspects. So the point is that whenever there is any bodies corporate, that bodies corporate can, and the individual and bodies corporate both can join LLP either as a partner or as a designated partner. Designated partner will be liable for the liabilities in compliance. And essentially that designated partner is also a partner. Whenever any bodies corporate is becoming partner or designated partner, then it is necessary that that bodies corporate must nominate, must provide a nominee, and that nominee must be an individual. So individual nominee is to be named by that bodies corporate, whether as a partner or as a designated partner. So whenever any bodies corporate will be partner or designated partner in any LLP, in that case, apart from that bodies corporate as a partner or designated partner, there would also be the nominee partner or nominee designated partner who would invariably come into play. But question arises that whether that nominee partner and bodies corporate partner is one partner or they will be considered as two different partners. No, they will be considered as one partner only. The partnership interest and partnership aspect would be with that bodies corporate, as far as because bodies corporate is not a natural person, and therefore there it has to represent through some natural person, and with that concept, this concept of nominee has been there. So on one hand, we should understand this concept of designated partner, and on other hand, we should take note of this nominee of a bodies corporate concept. So this has been there. Let us understand it by this kind of example. And basically, whenever we are analyzing the partnership structure of any LLP, we should always take note of this, that who are the individuals, how many individuals are there and how many bodies corporate are there. And within individuals, there would be how many individual partners and individual designated partner. Similarly, for bodies corporate also, how many are bodies corporate partner and bodies corporate designated partner. And in case of bodies corporate, there would always be nominee who would be individual and representing them. Or as far as let us say MCA master data view signatory detail is concerned, the name of nominee designated partner would get reflected in case of bodies corporate. So as far as liability is concerned, as far as compliance under LLP Act is concerned, or let us say for any adjudication matter, the show cause notice will get issued to that nominee designated partner. But naturally, nominee designated partner is a named by the bodies corporate and is acting for and on behalf of that bodies corporate, and therefore the financial liability will be that of the bodies corporate, but it would be acting always through that individual nominee designated partner, so as to say. So I hope it is clear to all. And this is what is the basic concept as far as this aspect is concerned. We will understand about incorporation of LLP, which is a simple process, that and how it is. There are only run LLP, which is for availability of name. Even choice is available that it can be as a part of the filing of the FILIP itself. So you need not apply two-stage. Directly you can file the paper for incorporation, including name availability. You must have at least two designated partner. Designated partner must have digital signature and must have director identification number. Even if they are not having DIN, through FILIP, up to 5 designated partner can apply for DIN. In case of company, only 2, 3. In case of private company, public company respectively, and in case of producer company, up to 5 director can apply in case of company. But in LLP, up to 5 DP is allowed without having DIN also. So application can be made in FILIP for incorporation. Issuance of PAN and TAN is integrated. One unique feature is that in case of LLP formation, the LLP agreement is not to be filed at the time of incorporation. It is always to be filed after incorporation. It's like that. And every designated partner should have DIN, or they can apply through FILIP. So DIN is the main is to be used for designated partner. But as far as normal partners are concerned, they can use either a permanent account number in case they are resident partner, or they have to use passport if they are non-resident partner. They may also use DIN if they are heavy. So in that case, this may not, so they have option to use DIN also. It has been like that. As far as incorporation of foreign LLP is concerned, name availability is not to be applied through RUN, but it is to be applied through LLP 25. LLP 25 form is to be used. Here, one more point to be noted is that name availability remains valid for a period of 3 months in case of LLP. In case of foreign LLP, it remains valid for 3 years. That kind of provision is there in LLP Act. It is in sharp contradiction with company formation, where name availability remain valid for 20 days in case of incorporation and 60 days in case of change of name for company. It has been there, right? One point to be noted is that subscriber sheet is to be physically signed by all partner and designated partner. Designated partner have to also affix their digital signature on LLP 9, which is also to be submitted with Philip. So with Philip, only one linked form, LLP 9, requiring digital signature of designated partner is there, right? So these are few aspects as far as LLP incorporation is concerned. I would like to very quickly deal with this aspect that what are the permissible activities, because this creates a lot of sometime that confusion that what kind of activity can be carried out, and that creates some issue or some difficulty, and how we can find out that where the activity to be undertaken by that LLP is given. So one thing is there that LLP can be formed only for business. It cannot be formed for non-business purposes. So for charitable activity and non-business activity, it is not permissible, right? What is meaning of business is explained in section 2(1)(e) of the LLP Act. And one amendment which has taken place is that the activity which is notified by central government may not be considered as business. At this juncture, there is no such kind of notification issued by central government, but in all likelihood, the finance activities may get notified. At this juncture, question arises that can LLP be formed only for financial activities? Answer is no. So NIC code 65, 66, 67, 68 cannot be put in LLP formation. The LLP formation would get rejected at the end of CRC if those finance activities are chosen, because that is not considered as permissible business activity for the LLP. But if LLP for other business activities is having surplus fund, and if it want to invest that surplus fund in securities or things like that, then it is permissible. There is no bar on that. So there was some confusion that whether manufacturing activities are allowed. And I know in 2019, for 3-4 months, there was that confusion, and LLP with manufacturing activities were not allowed to be incorporated. They were rejected, or objections were coming in those kind of LLP formations. But later on, this aspect was reconciled, and now there is a clarity that as far as manufacturing activities are concerned, LLP can be formed. In fact, if I trace back this confusion, then in Naresh Chandra committee report, which for the first time advised and mooted this concept of LLP, they suggested that LLP in India should be introduced for professional activities and for professionals. But then government took a bold step and permitted LLP for business activities. But then as far as finance aspect is concerned, LLPs are not getting permitted. And as far as charitable activities also, because it is not business within the meaning of that section, therefore also it will not get permitted. Where business activities of LLP are to be disclosed. So business activities of LLP will get disclosed in LLP forms. Philip, as we have noticed, it will be there in LLP 3. So if there is any change in the business activities is required by any LLP, then they are required to file LLP 3. And LLP agreement is to be submitted along with LLP 3, whereby they can give new or different NIC code. There is only this facility of giving 3 NIC code, out of which one is primary activity and other 2 will be secondary activity. So question arises that whether LLP would be restricted only to carry out those 3 activities. Answer is no. That depends. What kind of activity your LLP can do, that depends on the understanding of the partners, which is reflected in the LLP agreement. And normally in LLP agreement, partners would always mention the main line of activity, and they would also mention that any other legal permissible. So if it is drafted that wise, then there will not be any need to amend the LLP agreement. But the fact of the matter will remain that whatever was declared in Philip or in the last filed LLP 3, that would continue to get reflected as the primary or main business activity of that LLP. So as far as outsiders are concerned, they will think that this LLP's main activity is this. And therefore, to avoid that confusion, it may be so required that if you want to regularize that mismatch between your actual activity and the activity which is getting reflected on MCA system and including in your annual return in LLP 11, because there is a pre-fill, your main activity will get pre-filled and you will not get any option to amend it through LLP annual return. For that, you have to file LLP 3 only. So this aspect has been there. Now here, one aspect which is required to be taken note of is that as far as LLP agreement is concerned, LLP agreement is not a public document. It is not open for inspection on the MCA site. And therefore, if any outsider dealing with the LLP is concerned, he has to get the copy of LLP agreement from the partner or from the LLP. Because whatever is mentioned, and this is very, very important aspect, which is required to be taken note of by the partners and by the LLP and by the persons dealing with the LLP, because for any act done by the partners, how far LLP will be liable, whether a partner is having authority and whether that act is within the scope of permissible business activity, all that is required to be carefully evaluated. And from that viewpoint, proper mentioning of the business activity in the LLP agreement is very, very important, and outsiders should also have careful evaluation of the same. But again, it's not necessary that you draft your LLP agreement to lay down all the different clauses which are normally mentioned as a main object and incidental, that is the things which are supplemental to the main activity. It's not necessary that you have an elaborative mention of those activities, right? It can be intelligently drafted in a compact manner that can be described. But you have to ensure that whatever activities which LLP is carrying out, whatever actions which is taking, it is having the backing of the understanding amongst the partners as reflected in the LLP agreement. And who is acting on behalf of LLP, whether that partner or designated partner is authorized and whether that act is within the scope of their authority or not, all that is also required to be carefully evaluated. And the same is applicable for the business activity. So here in this slide, we are focusing on business activity. Sometimes this issue also arises that something is not very clearly mentioned, and then outside party feel jittery and they say that and they challenge that particular act of that partner, designated partner or LLP, that whether at all it is within their permissible activity or not. This section 14 is also required to be referred to, which empowers the LLP that it can do or suffer any acts or things as bodies corporate may lawfully do or suffer, that kind of thing. So that's I just wanted to bring that in this slide. Now, for next 4-5 minutes, I would deal with LLP agreement, and then we'll try to have first round of questions connected with these concepts. So basically, little bit about that I have already laid down, that this LLP agreement, whether it is optional, answer is no. Each and every LLP must have LLP agreement. Only in one situation, only in one case, somebody has incorporated LLP but has not carried out any business activity, and after 1 year, they can strike it off. Then even without filing any LLP agreement or even without having any LLP agreement, that LLP can be struck off under that provision. That kind of enabling aspect has been there. Otherwise, any LLP which commence any business activity must have LLP agreement, and it will be bound to file that LLP agreement on MCA portal. And therefore, this is a very important post-incorporation compliance which we must take care of. And mind you, the initial LLP agreement is required to be filed within 30 days from the date of incorporation and not from the date of entering into LLP agreement. So let us say I have incorporated LLP on 1st January, then on or before 30th January, I must file that LLP agreement. Suppose the partner enter into LLP agreement in February, then it will be considered as late filing. It's not like that agreement is on 1st February and therefore I can file it in next 30 days. No, filing requirement get triggered within 30 days from the date of incorporation. So we should be mindful of this. I find many of the times this some issue arises because of that misunderstanding. So this aspect is required to be taken note of. One aspect which is also important and which I must deal with, which is already there in this slide, is with respect to this aspect that there is one schedule, first schedule, Schedule 1, which deals with the matters which become applicable in the absence of any agreement on certain matters. It's not the model form of LLP agreement. These are only the model clauses of the LLP agreement. Meaning thereby, if LLP agreement partners must have, but if LLP agreement is silent with respect to those matters for which provision is there in Schedule 1, then that provision of Schedule 1 will become applicable for that particular matter. So there is that deemed applicability also, but then it's not a substitution for the entire LLP agreement. It is only taking care with respect to certain clauses. At the same time, I would also bring to your notice that many of the clauses of that Schedule 1 are not practical or are not useful in all the cases. And therefore, it is advisable that partners and designated partner, that is LLP, should have specific provision for capital contribution, profit share, management, decision making. I have listed down the points, not repeating the same, but I find that we should be mindful whenever we are advising any LLP in its formation. We should be mindful that LLP should have specific clauses for this purpose. The LLP agreement, whether LLP should be party of that LLP agreement, answer is yes. LLP would be definitely a party to that LLP agreement. There is a provision that partners can enter into LLP agreement before formation of LLP. But in that case, that agreement must be ratified by the LLP after incorporation. And if LLP agreement is entered into after incorporation of LLP, then LLP should necessarily be a party to that LLP agreement. Meaning thereby LLP agreement is binding partners inter se, and it is also binding LLP with its partners and partners with LLP. But as we have noted, mutual agency is missing. So partner is the agent of the LLP, but partner is not the agent of other partner under LLP framework. But in normal partnership, a partner is an agent of other partner also. So that another shield, apart from limited liability, this is very, very important feature which is there in LLP, which is in sharp contradiction with the normal partnership. So that has been there. And as I said, that this LLP agreement is a very important document. It is at the core, it is at the heart, and a lot of flexibility is given that it can be designed to suit the requirement of the particular partners and designated partners. But that flexibility must be used in a very proper manner. And sky is the limit as far as having variety of different clauses and bringing variety of different implications in that LLP is concerned. So all this is possible under that LLP framework by virtue of LLP agreement. So that has been there. LLP agreement, I have already said, not open for public inspection. And another aspect is that LLP agreement, payment of stamp duty on LLP agreement is a state subject. So we have to refer to the respective stamp laws of the respective state government. But then this formation cost of LLP as far as payment of registration fees, filing fees, and stamp duty is very, very small amount. If I say about registration fee, at the time of incorporation, it ranges from 500 to maximum 25,000 rupees. And as far as stamp duty is concerned, it ranges from 100 rupees to 15,000 rupees, depending on different states and those kind of things. So formation cost is very, very small as compared to the company. And here also, any amount of capital contribution can be brought in LLP, right? All that is there. So as far as LLP agreement is concerned, I would say that this is very, very important document. In fact, this is not only the constitutional document, but it also lays down the rules and regulations for the governance and matters and issues pertaining to that LLP, which each and every LLP must have. And therefore, drafting of LLP, we should be mindful that on one hand, we can aim for flexibility, but then one has to trade off between that rigidity and flexibility depending on the need of the particular situation or matter. So this has been there. I will only lay down the aspect which I have not spoken before with respect to this filing of LLP 3, because that is connected with filing of that LLP agreement. I already said that this is to be filed post-incorporation. This profit share, capital contribution, what it can be, it has already been reflected. In fact, you will find the capital contribution is required to be mentioned in Philip, and profit share is to be mentioned in LLP 3 at the time of incorporation. But on subsequent occasion, both capital contribution and profit share will be required to be reflected in LLP 3 only. LLP 4, which is appointment and cessation of partners and designated partners and change in designation or change of nominee or change of name and address, for that LLP 4 is to be filed. But for that LLP 4, neither capital contribution nor profit share is required to be reflected in that LLP 4. So LLP 3 is not only the filing of the LLP agreement, terms thereof, and a compulsory attachment of that LLP agreement would be there in this LLP 3. Apart from that, it will also capture the profit share and capital contribution of each of the partner and designated partner in that LLP. So that is the main aspect as far as filing of this LLP 3 is concerned. And one good thing which has been there in this present filing regime is that the details of partner and designated partner would automatically get validated at the time of filing itself. So if you are filing LLP 3, it will get you have to download the Excel which will contain the existing data of the existing partner and designated partner, and in that you can add, delete, change or no change can be declared, and then it can be uploaded again, so that there is a consistency and accuracy as far as the data of the partner and designated partner in that LLP is concerned. So I think this is very nice concept and nice way this has been captured in LLP filing regime as far as filing of LLP 3 is concerned. So this has been there. One important aspect where sometime I find this is the area where a lot of question comes is with respect to this, that when it is linked filing and when it is not. So if there is a change in business activity, then LLP, if a change in business activity, for that if you are filing LLP 3 and if it results into change of name, then filing of form LLP 5 would be linked form. If there is a change, addition or deletion of partner or designated partner, then along with LLP 3 you have to file LLP 4 also. If there is a change in partner's contribution and profit share only, right? In that case, LLP form is not a linked form. Then only LLP 3 can be filed. And if there is any other reason, then LLP 3 can be filed on standalone basis. So for para C and D, LLP 3 can be filed on standalone basis. But otherwise for para B, LLP 4 is linked form, and for change of business activity resulting into requirement of change of name, then LLP 5 would be the linked form, right? This LLP 4 I have already laid down about it. A small company I have said about this, that basically that limit of 25 lakh and 40 lakh is the present limit. Maybe small is too small in LLP, while small company limit has been increased to 10 crore and 100 crore. We are having abysmally low limit of a small LLP of 25 lakh and 40 lakh rupees. Of course, government under this provision has power that they can notify this limit up to 5 crore rupees and 50 crore rupees respectively for the contribution and turnover. But what is the benefit of small LLP in LLP Act? The benefit is only with respect to the 3 matters. One is that adjudication penalty can be 1/2 in case of small LLP. Registration fees and filing fees slab is lesser. And I would say that the filing fee and additional fee slab you can find in Annexure A of LLP Rule 2009. So, which is amended from 1st April 2022 by virtue of that LLP Amendment Rule of 2021. So, by virtue of that, 2022 Amendment Rule. By virtue of that, this new slab has come, but within that new slab, in that slab, it is lesser filing and registration fee, and including additional fees is also less. Interestingly, there is no exemption or relaxation as far as certification of small LLP is concerned. So, and there is hardly any form where certification is not there. Run LLP may be one, and couple of other forms. Otherwise, LLP's professional certification is compulsory in almost all the cases. Of course, in annual return also, it may not be required if it is not reaching that threshold, that we will note separately. So this has been there. I think with that, Surbhiji, we can have some questions. I think I have already spoken enough, more than an hour. So maybe there are many more points, but I think at this stage, let us bring some interaction into play. Right.
Yes, sir. We have certain questions, and I would like to take one by one the
Please,
questions.
please.
So one question is there any mechanism for valuation of capital contribution in LLPs, like valuation of shares in company?
Yes. Yes, in LLP rule, there is a clarity. In the Act, it is not mentioned. There is a provision which say that partner can bring capital contribution either in cash or for consideration other than cash also. That clarity is there in the Act. But whether for that any valuation is to be done or not, nothing is there in the LLP Act. But LLP rule shed some light on that. And it say that whenever non-cash contribution is there, it must be valued. And it say that it needs to be valued by practicing chartered accountant, cost accountant, like that. Interestingly, it does not talk about registered valuer. So I think this concept is going to come in LLP rule or in LLP Act also, that registered valuer concept. At this juncture, it's not there. But then valuation requirement is there. Yes.
Sir, LLP has received contribution from a foreign individual investor. Other than LLP 1, which please suggest which compliances are to be done?
These compliances are to be undertaken under the FEMA requirement, right? And that for that purpose, that registration on that forms portal is required. Then the query already say about that LLP 1 is required to be filed. And for that, detailed guidance and regulatory framework is already laid down by RBI. In the later part of my discussion, I have given reference of that. So they are required to refer to those references. FDI in LLP, ODI by LLP. Fortunately, there is very much clarity as far as legal requirement and procedural requirement is concerned. I have given reference, but for the paucity of time, I'm not dwelling because I know so many other basic concepts are yet to be discussed. So I'm not having a special point on this FEMA aspect at this juncture, and would only say that the concerned querist or my learned friend may refer to that that link. Yes, please.
Sir, an OPC is a partner in LLP with 25% profit and loss sharing. What compliances are required for beneficial ownership provisions, and what will be the procedure and forms?
Yes. So in case of OPC, surely if OPC is becoming a partner of an LLP, it will surely trigger disclosure of SBO requirement, because I will more discuss about that, but since question is there, I will seize the opportunity to pitch in that concept of SBO. The concept of SBO is like this, that whenever there is any non-individual partner in the LLP, then we have to find out there are certain requirements laid down. So if company is holding share, in this example, OPC is a company. So company is holding share, then we have to find out. And in that case, in explanation 3, there is a guidance available that any person who is majority holding in the company, that individual who is having majority stake in that company would be treated as SBO in that company. And therefore, in this example, that individual shareholder of that OPC would be considered as reportable SBO. And in that case, since he becomes a reportable SBO, he will be required to file LLP Ban 1. It is just like that Ban 1, only that it is LLP Ban 1 because it is in the context of LLP. In fact, the SBO concept under Companies Act is replicated in LLP, right? And it's almost same. So Ban 1 will be required to be filed by that reportable SBO, by that individual OPC shareholder to the company, and in turn company will file LLP Ban 2 with the ROC. So that is how that filing will take place. Yes.
Sir, can capital be contributed in phased manner?
This is really very nice question. And I would say why contributed in phased manner? It can be brought and taken out on daily basis. No restriction. It is not like that concept of company, कि जहाँ पे capital has been brought in and then easy to bring in, difficult to get out the capital. Here, see, there is this concept, obligation to contribute is required to be reflected. How much contribution is actually made, it can be different. And here also there is no concept that company mein subscription money must come within that permissible time limit, only then company is allowed to commence business. All this is not there in this LLP. So there may be LLP formed 10 years back, just theoretical, that and still not having any capital contribution received. Yes, obligation to contribute will be there, but the actual receipt of contribution may not be there. Fair, no problem. Yes.
CS is a designated partner in an LLP. Can he do CS practice and become a partner in the CS firm?
I think for that we have to refer to the code of conduct issued by and the council decision. According to me, the council decision suggests that the practicing CS cannot be designated partner. They can be normal partner. Just like on company footing, they cannot be managing director. They can be normal director. And they can have profit share up to 51%. More than that is not allowed. Okay. This is what is my understanding. I may be wrong also, but this is what is my understanding at this juncture, right? So please refer to the council decision, right? Final wordings.
Yes. Right. So we can continue with the presentation and rest of the questions we can take up in the end.
Right, right. Okay. So thank you very much. So as far as this, not only we can form LLP, but we can also convert the LLP. There is also this permissibility that a partnership firm can convert into LLP, or a private company or unlisted public company can also convert itself into a LLP. So this is made permissible, and for that the regulatory framework has been enabled. In conversion kind of cases also, the normal forms will be required to be filed, that run LLP, Philip, INC 9. Those will always be getting filed in case of conversion also. But apart from that, either LLP 17 or LLP 18 is to be filed. If it is conversion of form to LLP, LLP 17. Otherwise, it is a private company or unlisted public company to LLP, then LLP 18 is required to be filed. But one important prerequisite which is there for conversion of company to LLP is that the company should not have any subsisting security interest. That is, in its charge index, either there should not be any charge or all charge should be satisfied as a precondition for enabling that company to convert into LLP. And another condition which is required to be fulfilled is that all the shareholders would become partner and they would have the same proportion, capital contribution and profit share. Here you cannot choose different capital contribution and different profit share, particularly in case of conversion. This has been there. And certain other aspects of this conversion are also reflected in the help kit of that LLP 18, like Section 8 company cannot be there, company limited by guarantee cannot be converted, will not be allowed to be converted, and those kind of things. So all that should be taken note of. It is also to be noted that if firm is to be converted into LLP, there is automatically tax neutrality, because in Income Tax Act, firm and LLP both are taxed as firm only, and therefore there is no question of any tax implication when firm get converted into LLP. But if a company get converted into LLP, then question of tax implication would arise. But in that case also condition of tax neutrality are given in Section 47 of Income Tax Act. Those conditions are required to be fulfilled. So there is a regulatory framework laid down for conversion of partnership firm or conversion of company into LLP. But question arises, can LLP be converted into company? Answer will not be there in the Companies Act. Answer will not be there in the LLP Act. But it is possible by, if we refer to the provisions of the Companies Act, particularly Chapter 21, Part A, Section 366, read with the Companies Authorized to Register Rules 2014, there it is very clearly mentioned that LLP is also considered as unregistered company and it can be registered as a company under the Companies Act. So this is possible. So, but then question arises whether LLP can be converted into a normal partnership firm. No provision, and therefore this is not permissible or possible. Okay. So now we move on to the aspect of accounts and audit. Interestingly, in LLP, financial year would always be a period from April to March. No other option, no other choice is available. In company format, it may be possible for the company to follow other than March in case of consolidation and having foreign subsidiary holding and all those kind of things. That concept is not there in LLP Act. And another difference which is there is that a company which is formed, LLP, here there is some mistake, LLP which is formed after 30th September, financial year may comprise of a period of 18 months. So let us say an LLP is incorporated on, let us say, 1st December 25. That may have financial year ending on 31st March 2027. So it can be as long as 18-month period, that is permissible. But in that case also, it may choose to end it on 31st March 2026 because of the fact that tax return would be required to be filed. And for that purpose, they will be required to draw their, have to close their accounts. So better to follow, because in LLP Act, it is permissible because word used is may. So that is required to be taken note of. But as far as accounting and audit aspect is concerned, at this juncture, many liberties are available to the LLP. But at the same time, we should be aware that new provision has been introduced in the LLP Amendment Act, and by virtue of that, the accounting and auditing standards may be prescribed by central government by virtue of Section 34A. So in the time to come, more and more regulatory provisions and clarity and transparency and requirement is going to come as far as the way in which accounting, auditing practices of LLPs are concerned. Where the format of statement of accounts and insolvency is given. So at this juncture, the format itself can be found in form LLP 8. Interestingly, you will find in the entire LLP Act and rule, there is no terminology called financial statements. In the Act and rule, it uses the word statement of accounts and solvency. That's the key concept at this juncture imbibed, which is not clearly reflected as financial statement, so as to say. ICAI has given guidance note on financial statement, and they have given a format, Excel template, which can be used as a format of the statement of accounts, that is financial statement, which can be used by the LLP. There also, as far as there may be an LLP not triggering the audit requirement, and there the limit is capital contribution up to 25 lakh and turnover up to 40 lakh rupees. Both are cumulative. In those kind of LLP, audit is not compulsory. Otherwise, LLP falling outside these limits, they have to get their accounts audited also. Right? And at this juncture, there are no accounting standards which are laid down, prescribed by SEBI, and therefore, if audit is to be carried out by a chartered accountant, as per ICAI guidance note, that auditor will be required to follow those accounting standards based on the level of entity. So this has been there as far as, and every year this is annual ritual of each and every LLP, that they are required to file statement of accounts as well as annual return. Statement of accounts and solvency is required to be filed in LLP 8, and annual return of LLP is required to be filed in LLP 11. So for that, provisions are there, which is always to be filed by LLP. Interestingly, in case of LLP, both this LLP 8 and LLP 11, the filing date are fixed, in the sense that whatever is mentioned, ultimately it results that LLP 8, the last filing date would be 30th October. And for LLP 11, annual return, last date would be 30th May. Because clearly timeline is linked with the end of the financial year. And as we have noticed, end of financial year will end on 31st March in case of each and every LLP. And therefore 60 days would end on 30th May, requiring the filing of LLP 11. And for this, the requirement is given that 6 months from the end of the financial year is considered as event date, and within 30 days from the event date is the filing date, resulting into that 30th October as the last date for filing of LLP 8. One aspect which is required to be taken care of while filing this LLP 11 is that in LLP 11, this is very important, is that, and in LLP 11, most of the detail come from pre-fill. But one important aspect which is required to be noted, and where I find that sometimes LLPs and partners and professionals are facing difficulty because this gets missed and unnecessary complication arises because of this. And the point is that in LLP 11, and mind you, In case of LLP, LLP 11 is to be filed first on or before 30th May. There one aspect which is required to be disclosed or declared is that amount of contribution actually received and accounted for is required to be mentioned in LLP 11. So we have to ensure whenever we are filing annual return of any LLP 11, we have to ensure that the capital contribution of the partner, which is received and reflected as on 31st March of that is the last date of that financial year, must be crystallized, must be clear. It should not get changed or it should not be indetermined or some accounting entries are still pending or like that. It cannot be like that. It has to be, because it has to be declared as a part of LLP 11. Mind you, obligation to contribute is a frozen point, is a frozen figure by virtue of LLP agreement, by virtue of your filing of LLP 3. It will get pre-filled and you cannot change it. If you want to change it, you have to file LLP 3 and LLP agreement. Only then it will get changed. So obligation to contribute is one thing, but how much they have actually contributed and accounted for is required to be firstly reflected in LLP annual return, and in LLP 8, it will get autofilled. You cannot change it. And therefore, this architecture of the form is required to be taken note of, right? So, because, and one more aspect to be noted is that there is no revised filing of LLP 8 and LLP 11 possible without entering into the process of getting the earlier filed form invalidated, and then fresh filing with late fee is required to be undertaken. And therefore, this is one area that we must ensure that all data which is filed or all disclosure which are made are accurate, and such kind of issue should not arise that later on some change is required to be made into it. So that's with respect to that connection of LLP 11 with LLP 8 is required to be taken note of. So, and as far as LLP 8 is concerned, one aspect which is required to be taken note of is that there is that part A of LLP 8 is the statement of solvency. There, a declaration is a inbuilt part of the form where the designated partners are required to disclose that they have, that the LLP is in a position to pay its debt in the ordinary course of its business. They have choice to write is or is not. That selection can be made. It's not having any, on the face of it, it may not have implication, but on the back of it, it may have implication as far as triggering IBC against that LLP is concerned and all those kind of things. More particularly given the fact that on one hand, LLP is given limited liability benefit, but on the, and this capital contribution can be freely introduced and exited kind of thing. It can be very easily increased or decreased by filing LLP 3 and those kind of requirement, changing the LLP agreement. I think this is very important area which an outsider dealing with the LLP should look into and should evaluate the LLP with respect to the transaction which they are undertaking with the LLP. And in that regard, there is not much elaboration or discussion or clarity given in the LLP Act or LLP rule about it. It only says that this kind of declaration of solvency, this kind of statement of solvency, it's not declaration of solvency, it's statement of solvency is required to be given. And some format is there in LLP Act 8. So this has been there. Okay. So as far as signing of LLP 8 and LLP 11 is concerned, I should lay down that sometime there are confusion or it's not very clearly emerging. Let me make an attempt to clearly give as to when this LLP who is required to sign this LLP 8. As far as LLP 8 is concerned, it is required to be signed by LLP 8. It is to be signed by 2 designated partners. That's first thing. It is always to be signed by 2 designated partners. That's must. So signature, 2 designated partners. Then certification, there is either or. If it is LLP with that capital contribution 25 lakh rupees, more than 25 lakh rupees and turnover more than 40 lakh rupees, then it also needs to be certified by the auditor of that LLP. Otherwise, it needs to be certified by the designated partner. So 2 designated partner must sign. Certification either auditor would certify or designated partner would himself certify. That depends on that contribution level and that turnover level. Apart from this, there is this concept that LLP 8 should also be certified by a practicing professional. So in LLP 8, there would be 4 digital signature, which would always be required to be laid down. Either it would be, as far as third signature is concerned, it can be either that of the signature of the auditor or it can be the signature of the designated partner. One of those 2 designated partner can themselves put their signature. So that is as far as this certification requirement is concerned. Let us note LLP 11 and then have few second round of questions. I think there will be many questions as far as these aspects are concerned. So in LLP 11, the signing requirement goes like this, that LLP 11 is to be verified by a designated partner. And then it is to be certified by another designated partner if obligation to contribute does not exceed 50 lakh rupees or turnover does not exceed 5 crore rupees. Then another designated partner need to certify it. And it should be compulsorily certified by practicing company secretary if obligation to contribute is 50 lakh rupees or more, or if turnover is 5 crore rupees or more. So this is, and mind you, for LLP 11, this is exclusive recognition to practicing company secretary. So any LLP which is having capital contribution obligation to contribute of 50 lakh rupees or more, or turnover of 5 crore rupees or more, then practicing company secretary should compulsorily certify annual return of that LLP. And if it is below 50 lakh rupees or 5 crore rupees or less, or 50 lakh rupees or less, as far as capital contribution or turnover is concerned, then designated partner also need to digitally sign it. So it depends. Sometime there may be 2 DSC also are good enough. Sometime it may be 3 DSC, or sometime it may be 2 only. It depends. It depends on that matrix of whether the capital contribution is 50 lakh rupees or less, or turnover is 5 crore rupees or less, right? So it depends on that. So this is with respect to filing of this LLP 8 and LLP 11 is concerned. Should we can have question as far as this LLP 8 account audit requirements are concerned.
Yes, sir, we have received some questions, so I'll take one by one.
Please.
Sir, what if a partner are bringing immovable property as contribution and how such valuation is to be done?
Answer is same as I have given earlier. So
Okay.
no change in that answer.
Okay.
Registered valuer is not there, but the valuation is to be done by chartered accountant or cost accountant. But naturally, chartered accountant and cost accountant would rely upon the valuation report of the valuer who is competent and authorized to carry out valuation with respect to immovable property, maybe chartered engineer or maybe any other valuer or maybe registered valuer also. So better practice is that have the registered valuer report, but there is no mandate as far as rule is concerned. Yes.
Okay. Sir, whether LLP can invest its surplus funds in financial and real estate assets when its main object is import, export, wholesale trade, and real estate activities?
According to me, yes. No express bar on the same, but company should always be mindful of its main activity because uh, at at this juncture there is no strict regulatory requirement for the same. But naturally, see, I explained little bit about that whenever LLP is dealing with outsider will also do their own due diligence. So if let us say some LLP is coming to me for entering into any financial transaction, and if I evaluate that LLP and I find that their main activity is export import, but their major chunk is investment in that, I have to take my own call that should I deal, not deal, or what is what. And sometimes other party may insist that you change your activity code. In that case, they have to follow that process of doing that. But otherwise, so far as LLP and its partner are happy, so far as outsiders are happy, this can be done. There is no express requirement which restrict or prohibits LLP to do.
Okay. Sir, an LLP having two body corporate as designated partner, having nominees, and both contributing 50% capital, what would be the applicability of Form 4B and 4C as per Rule 22B?
Right. See, as far as 4B and 4C are concerned, they are different thing altogether. SBO is different thing. If it is 50% holding, nobody is holding majority stake in the company, then to that extent, reportable SBO may not get triggered unless there are element of control, element of significant influence is established, or either alone or acting in concert kind of concept can be brought into play. As far as 4B and 4C is concerned, I think that's a later part of the session, but since there is a question, I would explain this concept at this juncture itself. And this is a new requirement which has been brought into play by virtue of that amendment rule in 2023. And according to me, this is a very, very significant regulatory obligation which has been prescribed for the LLP. And their company secretaries can play very, very important role in guiding and finding out these kind of situations and guiding the persons of trade, commerce, and industry in ensuring, firstly, checking whether this kind of reportable requirement has been triggered or not. And if it is triggered, then how to cope up and how to ensure its compliance. And I think a lot of advocacy is required for that purpose. And it is good that this kind of question has come from one of the professional friends. So
Sir, another question. Can I take another question?
please.
Yes. Sir, the LLP want to change the name and through run form, it has obtained the name that it wants to add one point to the existing object. Please explain the form filing procedure. Is single agreement reflecting the change in the name and addition of object is sufficient?
Sufficient. It can be done. It can be done.
Okay.
And we have noticed that in LLP 3, you can declare that you are filing this LLP 3 for change of business activity. And then it will ask a question whether it results into change of name. Then yes, you have to select it. Then LLP 5 would be allowed as a linked form. But before you do that, you have to get availability of name through run LLP, because that would be prerequisite. Otherwise, your form LLP 5 will not get filled. So you have to firstly seek availability of name to reflect the change of name, and then LLP 3 with LLP 5 linked form can be done. Right? Now, as far as that earlier question, I think that was very important, and I should summarize my answer of that is this aspect that this concept has come. Of course, the concept has not come happily with the full backing of the legal provision in the Act, because this requirement has come in the rule. So it is not having any backing of any specific section, but it is having a backing of. It's not that it is not having any backing, but it is having backing of that power of central government to prescribe rule under section 79, that this rule has come, which has mandated, and where first mandate is that each and every LLP has to keep a register of partner. I think this is first and foremost register keeping requirement which has come in the LLP Act, and which is applicable to each and every LLP. Each and every LLP has to now keep a register of LLP by virtue of that Act, which is by virtue of the format of that register of LLP Act is given in Form 4A, which is the form prescribed for the same. Now, as far as declaration of beneficial interest is concerned, so whenever you come across any partner having capital contribution in the LLP, where the beneficial interest in that capital contribution belongs to somebody else, right? Then it is called that the registered partner is different and the beneficial partner is different. Registered partner is a person whose name is reflected as partner of the and having the capital contribution, but the beneficial interest of that capital contribution belongs to somebody else. Then that concept of registered partner and beneficial partner comes, triggering the reporting requirement. Registered partner who is not having a beneficial interest in the capital contribution will be obliged to file Form 4B with the LLP. And the beneficial partner would be required to file LLP 4C with the LLP. And in turn, LLP will be required to file LLP 4D with the copy of that 4B and 4C. This kind of requirement has been laid down. I think I will take you through this requirement. Yeah, this is all reflected over here, right? 22B, right? This requirement has been introduced. So this is what is there, right? This is there was that question that only bodies, corporate, and individual can become partner, and can HUF become partner of LLP? So HUF in its own name cannot become, but a Karta of HUF can act on behalf of HUF, and Karta in his individual name will become the partner of that LLP. And in that case, this requirement will get triggered, because Karta is the registered partner, but the beneficial interest is with the HUF, and therefore it will trigger this reporting requirement under these provisions, right? So it is like that. Yes, please.
So we can continue with the presentation.
Right. How much time I can take so that I can accordingly
so we need to wind up till 5. So
okay, can we up to 5 only, na?
No, we can take more than that also.
Okay, so maybe I project it to up to 5:15 to 5:30.
So we can, if possible, we can conclude it by 5:10.
Okay, 5:10. Okay. Yes. Sure. We'll try to do that. Sure. Okay. So This annual return and LLP 8 and LLP 11 requirement I have already explained. As far as other compliances are concerned, the point which is required to be taken note of is that in LLP, the e-filing was since very beginning, but then when LLP Act came, and e-filing was integral part of that LLP Act and rule. At that point in time, it was NIC, which was managing that e-filing portal of LLP, and there was only one ROC across India for those LLP. Later on, it was found appropriate, and then LLP filing was integrated with MCA 21 from 11th June 2012. And all LLP forms were migrated to V3 from 8th March 2022. So I think this entire LLP filing got migrated into V3 from way back in 2022. In case of companies, it was achieved in the last few months of 2025. These are also the forms and requirements which are there for change of name, that LLP 5, I have already explained a little bit about that. For change of registered office, LLP 15 is required to be filed, and there are a lot of liberties available to LLP because of the fact that even change of registered office from one state to another state is also very, very simple. Only condition will be with respect to giving an advertisement in the newspaper at least 21 days before the date of the filing of this LLP 15 and getting the consent of the secured creditor. If these two things can be achieved, then LLP can change its registered office even from one state to another state without any further approval of any other regulator or any other regulatory authority. In LLP, there is also a unique concept that an LLP can give intimation of any other address for the service of document. And for that, appropriate provision are there. And for that, LLP 12 is required to be filed. In that case, LLP will have two addresses. Registered office address, each and every LLP must have. And apart from that, LLP can give another address where service of document should take place. In service of document requirement, it has been reflected that if any LLP has given any address for service of document, then the document needs to be served to LLP both at the registered office and at the address, that other address also. So that's one point which needs to be kept in mind whenever any person is dealing with a LLP. As far as inspection of document is concerned, only few documents of the LLP are available and open for public inspection. That is, you find incorporation document, that is Philip, but actually Philip is not available in public inspection. Although rule lays down about it, but in actual practice, it's not available for inspection. But then LLP 8, LLP 11, they are available for public inspection, as well as LLP 4 would be available. But LLP 3, not available for public inspection. So that LLP agreement, if I want to access LLP agreement of any LLP by looking into LLP 3, that's not available in the public domain as a public document on MCA portal. It has to be obtained from the LLP or from its partner and designated partner only. So this is how the present framework has been designed. So it is like that. Now this aspect that has upgraded the compliance requirement of the LLP to a very large extent, that certain provisions of the Companies Act, there is a section 67 in LLP Act which enables the central government to apply certain provisions of the Companies Act to the LLP. And by making use of those provisions, central government has issued various notifications from time to time. Lastly, 11th February 2022, that certain more provisions, these which are described on the screen, are made applicable. On the earlier occasion, this winding up provision of the Companies Act, that was of 1956, those were made applicable. Then 458, that is central government can delegate its power to RD and ROC, that provision. 460, that is delay can be condoned by central government, that provision of the Companies Act is also now made applicable to LLP. And by virtue of this notification of 2022, there are 8 more provisions of the Companies Act has been made applicable. This section 90 is with respect to that significant beneficial owner disclosure. An almost parallel requirement, almost similar, comparable requirement, which is applicable for SBO in the company, is also applicable in case of LLP. 164 and 167 is the disqualification and vacation of office of director. Those provisions are also applicable, and therefore, if any LLP makes default in filing their statement of account and annual return for 3 consecutive financial years, then the partners of that LLP, designated partner, mind you, here the restriction or disqualification and vacation is applicable for designated partners only, right? It's not extended to the normal partner. That has been there. 165 is also an interesting aspect which deals with a limit on number of directorship. That is also applicable to LLP. So a person cannot be designated partner of more than 20 LLP. This has also already become the law of the land now. So in case of LLP, this aspect is required to be taken care of. 250, 206, 207 is more for regulatory kind of strengthening provision, in the sense that ROC has got power to order for inspection of books and registers, power to call for inquiry, power to call for information and inquiry, those kind of powers which ROC is having in case of company. Similar power ROC or central government has got by virtue of this applicability. 252 is a provision which says that if any LLP has been struck off, then it can be revived by making an application to NCLT, for which provision was not there in the LLP Act. There was only provision for strike off. Revival provision was not there, and therefore by extending the provision of the Companies Act section 252 to LLP, this has been made unable. This has been enabled, and this is how it has been laid down. So this is the requirement which I was just saying, that this has come into effect from 27th October. I have already spoken about it, so will not repeat it again. So LLP 4A, each and every LLP now are required to maintain this LLP 4A, and all company secretaries, we should take note of and should ensure that this new compliance requirement in case of LLP is required to be complied with by the LLP. We should guide the LLP and its partner and designated partner for proper compliance of this requirement. I have already mentioned about it as a part of that question which I have handled. SBO also, about that I have laid down in a very, very crisp manner. Of course, there are many more nuances to it, but for the paucity of time, may not be dwelling much on that. And I think whatever explanation which I have given, and this and for this SBO requirement, there is separate rule which is called LLP Significant Beneficial Owners Rule 2023, which has come into effect from 9th November 2023. And therefore, the requirement would be like this, that any individual who is reportable SBO as on 9th November 2023 will be required to file LLP Ban 1, were required to file this LLP Ban 1 on or before 7th February 2024. and any individual who become reportable SBO subsequent to, that is after 9th November 2023, they are under obligation to file BAN 1 within 30 days from the date of acquiring this significant beneficial ownership or any change therein, right? And within this, one more register which LLP will be required to keep is that whenever any LLP is having any reportable SBO, then that LLP is bound to keep another register which is called Register of Significant Beneficial Owners. And the format of that register is given in LLP BAN 4. So these are the main obligations as far as, that register is in LLP BAN 3. LLP BAN 4 is the notice to be given by LLP to any reportable SBO, or to bring on record or to oblige that reportable SBO to submit his LLP BAN 1. So register format is in LLP BAN 3, right? This is one area, very important aspect. In the Companies Act also, there is a buzz of this because of that fast track merger and all that. Unfortunately, in LLP framework, at this juncture, fast track merger is not enabled. I think there is a high need for introducing that concept in case of LLP also, but at this juncture, that fast track merger is not there in LLP present framework of the Act and Rule. But surely it will come in the time to come. And the provision of this compromise and arrangement and amalgamation and reconstruction are comparable with the provision of the Companies Act. So here also there is a role of NCLT. Of course, as I said, fast track merger is not there. So RD route is not available. In case of LLP, merger, amalgamation, compromise, arrangement, or reconstruction, it has to be only NCLT through this merger and compromise arrangement is to be struck. Again, it's that two-stage process. First motion application will be application for direction for convening of meeting of the creditors and class of creditors or partners or class of partners, right? And similar kind that later on petition and similar kind of approval requirement is also that on the similar footing, majority in number, 3/4 in value, and all those kind of things. So that has been there. Question arises that LLP can be merged with another LLP, but whether can LLP be merged with a company, or can LLP be merged with a company and company be merged with LLP? Answer is no. Earlier, there were some judicial precedent where Chennai bench of NCLT permitted the amalgamation of an LLP with a company under the Companies Act. But now, after LLP Amendment Act, there is a very clear-cut provision in the explanation which say that merger of LLP with a company is not permissible. So this is not allowed. Otherwise, you will find on a comparable basis with NCLT process, this compromise, arrangement, reconstruction, and amalgamation of LLP can be done. In LLP Act, also now there are provision for, there are very few provision where this penalty or fine or imprisonment can be imposed. I ventured to count them and could find that there are only 12 provision where penalty provision is applicable. There are only 13 provision where there is a mention of fine in case of those non-compliance, and there are only 4 provision where imprisonment has been provided. Out of which, in 3 cases, it will not be compoundable because it is only punishable with imprisonment. While in 1 case, it is imprisonment or fine, and therefore it becomes compoundable. Any offense which is punishable with fine can be compounded. any offense which is compulsorily punishable with imprisonment cannot be compounded. The same philosophy of the Companies Act is continued as far as LLP is concerned. This penalty will get imposed, can get imposed on partner or on partner also, interestingly. It's not that, because there are many provisions where penalty can be levied in case of certain kind of non-compliances. Penalty can be imposed on the partner also. So it's not like that the partners are always aloof to liability under LLP Act. For few provisions which are specified therein, their liability may arise. So that has been there. For adjudication on similar footing as that of the company, ROC are notified to be the adjudicating officer, for which they have to issue so cause notice. Then the written, they can give their reply to the same. Opportunity of hearing is to be given, and in a time-bound manner, this adjudication proceeding are to be concluded. This is how the provision has been laid down. Any person aggrieved by the order of adjudicating authority can file appeal to RD on the similar footing as that of the company adjudication. Almost similar comparable provisions are there, with change in the section number and change in the rule and change in the form number. Otherwise, you will find that look and feel is the same. So that is with respect to adjudication. Compounding, I have already explained. On the similar footing as that of the company is that offense is committed within 3 years, then it becomes non-compoundable. So repeated or habitual offender are not given the benefit of compounding. And just like in case of company, there are two compounding authority. It can be RD as well as NCLT, depending on maximum imposable fine. But in case of LLP, it is only the regional director who is compounding authority. And but then like company, application has to firstly go to ROC, and then they will forward the application to RD. In case of LLP, there is a specific form LLP 31, which is prescribed for filing this kind of compounding application. So it has been there, and once this order of RD is available for compounding, that is to be filed with ROC in form LLP 22. It has been there. So that is with respect to compounding. As far as prosecution is concerned, it is the special court which is given power for prosecution under the LLP Act. With respect to strike-off, winding up, and dissolution. Strike-off is the simplest method, but for that, LLP has to achieve nil assets, nil liabilities. And LLP should not be carrying on any commercial business or activity. So if it has ceased to carry on any revenue generating business, then it is said that it is not carrying out any commercial operation. Fortunately, there is a clarity in the rule 37 in the same explanation, which say that if there is no sale or purchase, but if there is a payment received from debtor or if payment made to creditor, then it is not considered as revenue generating activity. I think explanation and clarity like this is highly required in the rules. And fortunately, it is there in this LLP rule. So that is required. This kind of question also puzzles a lot of partners and designated partners, that LLP was incorporated. No activity was done for 3, 4, 5 years. No bank account opened. No accounts were prepared. No LLP agreement was done. And now they want to close down that LLP. So can they do so without filing any LLP 8 or 11 or without filing LLP agreement? Fortunately, clear-cut judicial, clear-cut regulatory prescription is there in LLP rule, which I have tried to reflect. Revival is now possible by virtue of application of section 252 of the Companies Act has been made applicable to LLP by virtue of that Section 67 notification. Winding up, I have already laid down that the winding up provisions are already there, but then this is having only limited application. Other than inability to pay debt, LLP can be compulsorily wound up by obtaining an order from NCLT by making use of the provision given in the LLP Act and its connected rules. Otherwise, voluntary winding up is out of the radar of LLP Act and rule. It will be required to be as per IBC Code 2016. That is, so that has been there, and inability to pay debt is under CIRP process of IBC 2016. So this is as far as winding up is concerned. This is what is with respect to that FDI ODI, the relevant reference of that FDI, right? That NDI rules will carry the provision for the same. So those can be referred to. I must also bring to the notice of all that IFSC can be registered and can operate in IFSCA framework for permitted activities. This is also permissible. But then in LLP Act, there is no concept called IFSCA LLP. Just like in company, we can have separate suffix to that LLP, and we can have that dedicated IFSCA company for under the Companies Act. That formation is possible. Similar kind of formation is not possible, but normal LLP can carry out IFSCA registration, but then it has to be the parent registration. The main registration will be with MCA as an entity. So entity registration would happen with MCA, but for that permitted activity, another registration and permission to operate, permission to register would be with IFSCA authority under LLP Act. In LLP also, there is a concept of that foreign LLP. And for that, different kind of form filing has been prescribed. Just like in company, there is a concept of foreign company. On similar footing, in LLP also, there is this concept of foreign LLP. These are very, very technical in nature and requires at least 5 minutes for each of the point to elaborate and to bring some meaningful explanation and conclusion. So I'm just laying it down, and just I have tried to capture it and kept it here for the consideration of my learned professional friends. So this is as far as this is concerned. Can LLP be the issuer? So LLP can never get listed on stock exchange. This is not possible. It is because of the fact that under ICDR regulation, LLP cannot be the issuer. And SEBI has given informal guidance on it way back in 2015. And this continues. Can LLP issue debentures? This is real. There is some confusion, and some attempt were also made by virtue of Company Law Committee report, where they proposed that yes, LLP should be allowed to issue debentures. But later on, it has not materialized in the Amendment Act. And therefore, the present position is that the LLP cannot issue debenture. Rather, I would say LLP cannot issue any kind of securities. Okay, so this has been there. There are many more points which can be said, but I will honor the time discipline and time restriction, and would only say that thanks to all my professional friends for their participation, although it was less than what I have expected anyway, and for the questions. Learning is a journey, not the destination. With that thought, I would like to leave and would take rest. Thank you very much.
Thank you so much, sir. And definitely this indeed a session with lots and lots of explanations and this technical topic, and members must have gathered their answers to the questions which they've posted during the session also, which we could not take due to time paucity. But I'm assured that whatever you have explained during the presentation, all the answers are there in the presentation itself. And I would like to request you to kindly share this presentation with us, so that members who have requested for the presentation, we can share it with them for their reference. And now I would like to place formal vote of thanks to our faculty, CS Manoj Hurkat sir, for taking his valuable time for us to deliberate on this technical yet a very interesting topic for all the company secretaries, either in employment or in membership. So thank you, sir, for taking your time and giving your 2 hours to members for this topic. And also, I would like to thank all the members who have joined in large number to have detail and gather information on this particular topic. Thank you, members. Thank you, sir.
It was absolutely my pleasure, and thanks to you, thanks to ICSI, thanks to the team, support team, Surbhi and all others, and thanks to our leadership team also. Thank you very much, and all the members for sparing their time and joining in webinar like this and enhancing the knowledge and coming out with the practical issues and questions, because that is what shape the future regulatory provisions and requirements. Thanks to all. Thank you very much.
Thank you so much. Thank you. Thank you.
Thanks.